So, Kathryn, let's just get your thoughts, all eyes tomorrow. What are you expecting and wanting to hear from Fed Chair Kevin Warsh as he takes the podium?
That's hard to say from a chair who has said he thinks communication should be more limited than in the past. I think that makes a lot of us even, maybe it's working the way he wants, that we're even in more anticipation of what he will say, since he said he doesn't want to say much, communicate much, give as much insight into what the Fed is thinking or doing, to have less forward guidance. So it puts an incredible weight on his words, and maybe shows the weakness of communicating less is that it leads to overinterpretation of the little that's said. But in terms of what I'd like to hear, I think I'm with, I would say, even the most casual viewer or follower of the Federal Reserve, is I'd like to hear a strong note of independence. That this is about responding to the needs of the U.S. economy and not about responding to the needs to a very loud and very vocal constituency of one.
Well, so is this, Kathryn, it's great to have you back. Is this a market that needs to be taken by the shoulders here? Hasn't Warsh kind of already made his point, to the extent that we're watching the bond market act up a little bit? Some of the longest rates we've seen on the long bond in years.
I mean, that's hard to say what would make the bond markets, say, calm. I mean, at the end of the day, it's not clear how much his influence would extend there versus a Congress that is making better fiscal decisions, and what his role is in quelling the bond market, versus the Treasury, versus Congress just doing a better job. I'd be curious if he weighs in on that at all. I think that I'd be surprised if he brought it up directly. But then again, I'm also incredibly good at not predicting what Federal Reserve chairmen say.
Well, we actually are waiting on the Treasury Secretary, somebody else, to announce a fiscal consolidation plan, $40 trillion in national debt. How are you thinking about this? What could actually be announced that would move the needle when it comes to the deficit?
I'm not sure what the Treasury could announce that would move the needle. I mean, we'd have to have congressional action to either increase revenue or decrease spending, something that Congress has been, frankly, loathsome to do. I think we're at such an incredible period of history to have a deficit as large as we have now in peacetime, when the unemployment rate is close to 4%. I mean, it's just a really remarkable moment in history of just how fractured and how irresponsibly governed our fiscal situation has been. So I'm not sure what a consolidation plan from the Treasury could really quell, when what we need is Congress to do a better job at its primary job.
Yeah, we talked to Michael Faulkner a couple days ago here, the former Deputy Treasury Secretary, and he suggested that the message should be, no, it's not a two-handle, it's 2%, and that this Federal Reserve will continue to act until inflation gets to that level. What would the bond market do if he said that?
I mean, I have to wonder. You have to wonder which master he's serving when we're talking about this, right? We want to keep borrowing costs low because we're borrowing up to the hilt, right? We're taking on so much debt and still actively borrowing and paying so much for it that, his actions in the short-term market last week and wanting to be aggressive about keeping rates low, is on some level fundamentally at odds with the idea that we need to raise interest rates, including on debt issuances, in order to get prices down. I mean, you can't have your cake and eat it too. Stewarding the economy requires very tough, very painful choices some of the time. This is why I think going back to what Warsh will talk about tomorrow, is he really going to make the case that we need to have aggressive interest rate increases, knowing what that means for the debt? Or is he going to make the case that we, need to take care of our fiscal situation, knowing that kind of the poster child for fiscal irresponsibility is the One Big Beautiful Bill Act? I don't see how the lack of sustainability in our situation can be talked about openly or honestly without incredible criticism of the current administration.
When does the 10-year hit 5%?
Y'all, I don't know.
I have to. I know it's not fair.
I'll just say somewhere between the next 1 and 12 months.
Hey, all right, in the next year, Tyler.
Well, we did want to ask you about some of the actions that the administration is taking, including yesterday, the president signed a proclamation that's going to lift tariffs on about 300,000 metric tons of beef for the next 90 days. This is actually a consumer product where consumers kept buying beef despite high prices, but data is starting to show us that there are cracks, and that trend may now be reversing. Just from your viewpoint, as we talk about higher prices, what do you think could be done to help sustain lower beef prices after this temporary action?
Well, I thought his announcement was a remarkable admission that his administration's policy of tariff is increasing prices, considering that his plan to ameliorate price pain in one market was through a reduction in tariffs. I felt like that was plain as day. Kind of what we had all been saying this whole time was that he is pursuing an inflationary policy. I think when it comes to the long-term price of beef and other goods in our economy, this is a war we're fighting on multiple fronts. Food, in some ways, is emblematic of this because there are lots of things that are outside of the control of food producers. I think, from my understanding, is that if you talk to farmers, drought and wildfire are massive constraints on their ability to have a stable supply or a large enough supply. But at the same time, we're talking about an industrial sector that is highly, highly concentrated. I mean, there's very little competition. You're going to have monopolies or duopolies at various parts of the supply chain. Just last year, there was a massive out-of-court settlement for price fixing in beef production. So there are things outside of our control that we need to be able to better manage with an economy and economic policy that is responsive to the needs of producers here in the U.S. At the same time, we've got deep weaknesses in our industrial organization that comes from a reliance on over-concentration that we've ignored in the past because prices were low enough. So having a concentrated food sector was okay so long as the price is low. It's not anymore. Versus policy that is essentially aggravating the existing problem, like tariffs, not adequately addressing it, like giving a very small share of beef imports a free pass for a period of time, and still not getting to the demands of the American consumer, which is they just want to be able to afford their life.
Yeah. This is a tough one. Even MAGA cattle ranchers are crying foul in states like Texas and in Montana, concerned that prices will be depressed for a longer period of time because of these imports. You add the situation with Canada, and in our remaining 30 seconds or so here, Kathryn, it does make you wonder what the farmer bailout is going to look like next year.
I mean, like it would add to the deficit.
I think that around to the debt.
We need to bail out farmers and producers, and it's going to be a deficit expense again because of the organization of our economy and fiscal responsibility.